Welcome to the Transparent FX Academy. This will be a very important tutorial, so make sure that you stick throughout the entire video without skipping any parts. So without further ado, let's jump straight into it. In this video, I will break down some of my favorite trades from my strategies. Now, as usual, I'm one of the only traders without fully verified my FXbook account, so all these trades are already there and they cannot be made up. So without further ado, let's jump right into it and learn as much as possible from these setups. Starting here from USD JPY, this was one of my favorite trades from the past week. We had a situation in which here on the daily time frame, we had a clear range. The market was moving in between these two levels. So we had the high here that was acting as resistance. Every time the market was testing that zone, essentially it was being rejected to the downside. And we had the bottom here acting as support. So essentially we had a clearly range bound market, and the market was testing the high of the range. Now, when you have a range-bound market and the market is testing the high, what you naturally expect is the market to reject to the downside and go and test the low of the range, because you essentially, unless you see a breakout to the upside or to the downside, you expect the market to continue to move inside of the range. So here on the daily time frame, the situation was quite clear. Dropping down on the 4-hour time frame, we had a situation in which the market had just created a massive impulse to the upside. Now, this impulse to the upside went all the way up and was testing exactly the previous supply and resistance, because from here, what we know is that all this rejection to the downside was created, confirming this area as a strong supply and resistance zone. And in this case, the market was testing the exact same zone, increasing the probabilities of seeing a correction away from this 4-hour supply and resistance area. Dropping down on the 1-hour time frame, there was the possibility of seeing a double top created at this zone, because this level was already acting as previous resistance. Now the market was testing it once more, giving the possibility for a deeper correction that we already wanted to see on the 4-hour time frame, because no market can just go up in a straight line. Every time there is a massive impulse, the market tends to create a correction in order for new buyers to step in. So when you see the market creating a huge push to the upside, that usually means the market is overextended to the upside, and it's only a matter of time before the market will print a correction. Now, in this case, the correction, as we will now see, was very sharp. So let's go down on lower time frames and see what kind of situation we had. Well, from a 15 minutes perspective, the situation was clear. We had a market which was moving to the upside with a clear, in this case, trend line holding the market. As we can see, and as we will now see in even more clear fashion, every time the market was reaching this level here, it was respecting the zone as support. So essentially, we had this trend line that was holding the market across the level. Then we had a big push to the downside, and at that point, it was clear that that trend line had broken to the downside. Now, the strategy that was applied here in this case was my terminator strategy for USD JPY. Now, if you head over to my website, there is a full description of the strategy with a historical backtest on more than 10 years of high quality historical data directly from the MetaTrader tester. So you can go and check it out. This is fully automated and tested on more than 10 years of data. I cannot obviously go in detail into all the rules of the strategy, but when the market reached this zone here, essentially all the rules of the strategy were satisfied, and my strategy executed the entry here with the stop above this level and a nice 1, 2, 3 almost risk to reward. And the market was very, very quick in reaching that zone in the span of around 45 to 1 hour. The market essentially reached the TP zone. So this was a very nice trade on USD JPY using the Terminator strategy, which again, you can go and check out directly on my website, which you'll also find the link linked in the description if you want more information on this specific strategy. Another setup that I'm really proud of executed according to the rules of my London breakout strategy was the setup on GBP USD. Now let's go and see what kind of situation we had here, both from a technical and in order flow perspective, by looking at also at what the commitment of traders was looking like. So what institutions were doing on this pair. Now, starting here from the daily time frame, the first thing that we have to keep in mind is that we had the creation of this M pattern. Now, I spoke about M patterns many times on the channel already. When you see the market create something like this, usually what you expect after that is a rejection to the upside and completion of the pattern at the neckline. So the previous support turned resistance. Now, the psychology behind this pattern is quite clear. When you see an impulse, the correction, and then the market starts continuing higher, a lot of retail traders FOMO into this market. So FOMO buy the pair, and they have their stop losses below the low. So if the market then goes and triggers all those stop losses, a lot of liquidity is created, because when you have a buy order and you have a stop loss, the stop loss is simply a sell order. So this liquidity often is used by institutions to actually then trigger it, create all those sell orders, and at that point they can use those sell orders to take the other side of the market, because always remember that in the market, for every buyer, there needs to be a seller. For every seller, a buyer. So in this situation, all those orders got liquidated. And at that point, the market actually can start to push to the upside, which is exactly what happened here. We had the M pattern, which was also testing a quite strong daily demand and support zone, because what we know is that from here, all these previous rejections to the upside were created and the market was testing the area. So there was a good probability to not only see the M pattern complete, but also to see a rejection away from this demand and support zone. Dropping down on the 4-hour time frames, 4-hour time frame, what did we have? Well, here on the 4 hours, the situation was clear. We had a bearish market with the creation of 4-hour lower lows and lower highs. The last move was the creation of a new impulse. The next logical step is the creation of a rejection to the upside, so a correction, because no market can just go down in a straight line. Every downtrend is created by a series of lower lows and lower highs, so a series of impulses and corrections. So also in this case, the logical step after this impulse would be for the market to create a correction higher and to go and retest this previous support turned resistance. Dropping down on the 1-hour time frame, what did we have? Here in the 1-hour time frame, we had a market which clearly was inverting trend. We were going from the creation of 1-hour lower lows and lower highs to shifting to the creation of 1-hour higher highs and higher lows. So essentially, we were experiencing a shift of trend from a bearish to a bullish market. In this situation, there is a good probability to see a massive impulse to the upside, creating also that correction, which already was likely when looking at the 4-hour time frame. Now, what was going on from an institutional perspective is that institutions were starting to increase their longs, adding 7,000 longs with the last report, 8,000 with the previous one. So institutions were starting to increase their longs from 65K to 73K, now 81K longs. So with institutions adding longs on the GBP, this means that they were already adding longs on GBP USD, because all currencies on the spot are traded against the USD. So in a situation like this, if we go down on the even lower time frames, like the 5 minutes time frame, what we can see is that we had a range breakout that was happening, because what we can see is that the market was ranging in between these two levels. We had the top of the range here and the bottom of the range here, and the market was moving in between these two levels and then starting to break out to the upside. Now, in this case, I obviously cannot share all the rules of my strategy, but the rules of my London breakout strategy were satisfied here. And essentially my strategy executed an entry at this level with the stop loss here below and the take profit for a nice more than 1 to 3 risk to reward. Now, I speak more about the strategy on my website. There is also a full 10 years backtest of the strategy on high quality historical data directly on my website. You can go and check it out as it is done live if you want more information on the strategy itself. In this case, it was a very nice trade. The market immediately moved aggressively to the upside with a huge spike
going and securing that 1 to 3 risk to reward in very few minutes. These are all 5 minutes time frames, 5-minute time frame candles. So as you can see, it really didn't take that much for the market to shoot up and hit the 1 to 3.2 risk to reward setup. So another one I'm really proud of. Now, all this free education and analysis that you see me share here on YouTube is actually just the tip of the iceberg. In fact, if you want to learn more, I really suggest that you go over to the Transparent FX Trading website, which you find linked in the description. And here you will have the possibility to gain access to all my courses, which range from the very basics of trading to the more advanced topics like building automated trading systems, building a portfolio of strategies, uncorrelated strategies, and much, much more using quantitative finance tools like the Quant Analyzer. So it's really something that you cannot afford to miss. You also have the possibility to gain access to my trading station software with the Telegram notifications integrations, one-on-one mentoring directly with me for any questions you have along the way, the COT data software, which you often see me use here on my YouTube videos. The program is also an all-in-one program, so you gain access to everything immediately, including all my strategies and EAs, and you also gain access to my entertaining trading show in which I share all my trades as they're happening. Here, you will see the presentation of each and every one of my strategies with the full historical backtest and presentations of the rules of the strategy. You also, as we were speaking about, have access to the live trading show. So essentially, every trade that is taken on my live account is automatically shown here in a very entertaining fashion as they're happening. So opened, closed, managed, so you can learn even more. And as you scroll down, you will see that you have the possibility to join and gain automatically access with email and password that you will create during the registration process. So again, I really suggest you go and check it out. The link is in the description, and I will see you on your student dashboard. If you enjoyed this tutorial, make sure that you click on the like button. Also, let me know in the comments below any new topics that you would like me to cover in my next tutorials. Make sure to also subscribe to the channel so you never miss new updates, and I will see you in my next video.